Hi, this is Zach Mayer with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 8th of October. Starting off with the FTSE 100, which did what it does best, which is pretend to be strong at the 50-day line and then break to the downside. The 82.40 level was the level in question. Below that, on an end-of-day close basis, we were fearing 81.65, the September intraday low. And then the worst case, which may not be totally out of line either, would be a move down to the floor of that falling red May trend channel just near the 8,000 level, which is just below where the 200-day line is now at 80.30. We haven't been below the 200-day line since back in February, and I suppose given the lay of the land, maybe it's time that we revisited that. And a day closed back above 82.40 would get us out of jail and then maybe suggest that 83.60 was on tap as the upside. In terms of the RSI, you can see the RSI breakdown as well that we had. So the RSI now at 43, breaking that uptrend line there from August, and not actually being a great leading indicator on the downside, apart from the bearish divergence that we had there at the turn of August, September. So not great on that, but we just had the simple line break on the FTSE. Moving on to the DAX, and here the picture was already a bit of a rug pull, but the market's still trying to find support at and just below the floor of the latest gap there, 18,900. And while we're above that, still looking for a retest of the best levels ever, 19,500, and have the door open to move towards 20,000. I suppose the way that this market's behaving does slightly suggest that the FTSE's woes are more its own rather than an international situation, even though obviously the geopolitical situation is a complete disaster at the moment. Moving on to the Dow, and here we're at the support area, so 41,800 our best support. Below that, 41,500, otherwise it's probably down to the 50-day line there at just around the 41,000 level. That would sort of echo what we've had in the recent past with tests of the 50-day line or just below, which have been a characteristic basically of the post-May period. If we do break up, then we're trying to look through a break of 42,300 to take us up to the top of that rising trend channel from this time last year as high as 43,300 plus by the end of this month. The problem is that the RSI is looking rather weak at the moment, even though it's still above the neutral 50 level, so that's probably why we haven't broken down yet. Moving on to Bitcoin, which had a slightly more positive flourish in recent days, but has failed once again at the 200-day line, in a range between the rising 50-day line there just above 60,000 and the March resistance line there, 67,600. And not really much to say in terms of which way this would go. I suppose the most likely thing after the recent failures below the resistance line there from March is that we have to test the downside. Moving on to gold, which has been and continues to be the star of the show, still hanging on there at the higher levels. The floor of that channel there from June, around 26.40. We're happy that we're above that. I want to see an end-of-day close above 2,700 to give us the move to the top of that June trend channel, as high as 28.80 by the end of next month. Just to have a look at crude oil as well at the moment because of the geopolitical factors. We were looking for this market to head up to as high as $81.50, the top of that falling trend channel from this time last year. We've just about managed to puncture a now rising 200-day line. That suggests that we actually could be in the run-up to a golden cross. In fact, we just have another day or two of confirmation there in terms of the 200-day line. But 81.50 looks as though it's nailed on while we're above the recent resistance at $74. Moving on to the stocks, and here we've got rather rare inclusion here with Corero network, but what can be said is that you can't really find a better chart than this at the moment. Maybe roadside retail in the same kind of vein, but we've broken through 20.5 pence, the old July resistance, looking for 28 pence by the end of this month. But that step fashion, absolutely perfect in terms of buy and hold for investors. It's a shame we can't restrict ourselves to charts like that. Moving on to Emmerson, where we're waiting for the Moroccans to, the man from Del Monte in Morocco to deliver the goods. A nice mid-move consolidation here. We've got the 50 and 200-day moving averages both rising at the moment and looking for at least a move back to retest February resistance around 3.3, 3.4 pence. See the top of that triangle I've drawn there heading for 3.25. I'm looking for that really by the end of this month. I think things should start to move quite quickly, especially while there's no end of day close back below 2.1 pence, which is the current stop loss on the bull argument, but still looking very strong there, as if somebody knows something is going to happen. Moving on to EnergyPathways, and consolidating here after the recent stellar move. Our initial target here was that red resistance line, top of that triangle there from March, at around 2.8 pence. Above that, we're looking for 4.6 pence by the end of this month, especially while we remain above the resistance on the way down there at 3.25. I think the thing to remember here is that even with all the good news and the £5 million injection, the shares are still below where they started on the market, above 4 pence. Moving along to ECR Minerals, and here looking a little bit more bullish here. We've actually gapped up today, unfilled gap to the upside off the low from today's Blue Mountain news, and that suggests that, as we've suspected before, the minimum on the upside here will be the top of that falling trend channel from back in February at 0.32 pence, and we're looking for that well before the end of this month. Ideally, there's no end of day close back below the gap floor there at 0.24 pence. On to Mkango, which seems to be making quite a meal of heading to the upside. We've had one or two attempts to break to the upside, but at least 5 pence looks as though it's well entrenched as support. We've also had an unfilled gap to the upside there, which remains unfilled. There's been partial fills of that, but failed gap fills are very bullish, and we're looking for this situation to finally push to the upside. 6.7 pence, the initial target there, that resistance line there from January, and then the top of the channel there towards 10 pence, hopefully by the end of next month. Nice to see the RSI pushing through neutral 50 as we speak, or as I speak. Moving on to Mosman, and here, bright day yesterday, sort of consolidating at the moment, but the good news is that we're above the floor of the gap there, and recent neckline resistance at 0.37 and 0.037, and above that looking for the July resistance line there at 0.052, hopefully by the end of this month. But the key here is that there's no end of day close back below 0.037. Moving along to Phoenix Copper, where I noted that after the latest rug pull for the shares, the RSI is actually still higher than it was before the fall back in September. So possible bullish divergence, and just a hint there that the shares are starting to respond at the lower levels. Obviously, we are at towards the year lows for the shares, but seems slightly unfair. We've also got a dead cross there, and hoping that the rise in the shares is actually cancelling out that dead cross. Ideally, the shares stay on the right side of 10 pence, and while they do, there's a chance of filling that gap up to the 16 pence level, ideally by the end of this month. If you're cautious, you probably wait for an end of day close through 11.5 pence, as that was resistance on the way down. On to Shuka, and here shares turning around quite nicely. Gap closed by signal there after we already had one of those actually last month, but another one today. And while we're above the top of the gap there at 7.75 pence, really looking for the shares to not only hit that 9.4 pence resistance line at the top of that channel, but head up to 12 pence, perhaps as soon as the end of this month. But nice sort of trade setup there where 7.25 pence is a significant level. Moving on to Seeen, and here shares finally rising. It looks as though the pesky seller in the stock, which has been there for years apparently, is finally gone, and we can head up to 5.5 pence, especially while we're above the 50-day line, currently around 2.8 pence. But the key there is that the seller is hopefully out. Moving on to the last one, which is Tower Resources. Here, nice mid-move consolidation. We're just about a day or two away from a golden cross between the 50 and 200-day lines, looking for a rather simple retest of 0.05 and the latest peak while we're above 0.035. That's it for me today. More updates tomorrow.